Here's something most people don't realize. You don't have to buy a single AI stock to profit from the AI revolution. In fact, trying to pick individual AI stocks is one of the riskiest ways to get exposure to this trend. History is full of investors who bet on the right technology and still lost money because they picked the wrong company. In this video, I'm going to show you 3 smarter, lower-risk ways to invest in AI. Strategies that give you real exposure to this trend without having to guess which company is going to win. Let's start with some context, because understanding why individual AI stocks are risky makes the alternatives make a lot more sense. Think back to the early days of the internet. The technology was transformative. Everyone could see it was going to change everything. And it did. But if you invested in the wrong internet company in 1999, pets.com, webvan, boo.com, you lost everything. Even if you invested in the right one at the wrong time, buying Amazon at its peak in 2000, you had to wait 7 years just to break even. The technology won. Most of the individual stocks lost. AI is following the same pattern. The technology is clearly transformative, but the AI landscape is changing so fast that the company leading today might be irrelevant in 3 years. Picking individual winners in a market moving this quickly is extraordinarily difficult, even for professional fund managers. So what do you do instead? Way number 1, AI-focused ETFs. An ETF is an exchange-traded fund. Instead of buying one company, you buy a basket of companies in a single trade. AI ETFs give you exposure to dozens of AI-related companies at once. So if one fails, the others carry the portfolio. 3 AI ETFs worth knowing about. First, the Global X Artificial Intelligence and Technology ETF, ticker BOTZ. This fund holds companies across the AI supply chain, semiconductor manufacturers, robotics companies, cloud infrastructure providers. It's one of the most established AI ETFs and gives you broad exposure without heavy concentration in any single stock. Second, the ARK Autonomous Technology and Robotics ETF, ticker ARKQ. Managed by Cathie Wood's ARK Invest, this fund takes a more aggressive approach, focusing on companies that ARK believes will be the long-term winners in AI, robotics, and automation. Higher risk, higher potential reward. Third, the Invesco QQQ Trust, ticker QQQ. This isn't exclusively an AI fund. It tracks the Nasdaq 100. But because the largest Nasdaq companies are all heavily invested in AI, QQQ gives you meaningful AI exposure through some of the most financially stable companies in the world. Lower volatility than a pure AI ETF, still significant upside. The beauty of ETFs is simplicity. You make one decision, which fund aligns with your risk tolerance, and you're instantly diversified across the entire AI landscape. No stock picking required. Way number 2, the picks and shovels strategy. This is one of the most powerful investing frameworks ever articulated, and it applies perfectly to AI right now. The idea comes from the California gold rush of 1849. Thousands of prospectors flooded California chasing gold. Most of them found nothing and went broke. But the people who sold the picks, the shovels, and the blue jeans to the prospectors, they made fortunes, regardless of who found gold and who didn't. In the AI gold rush, the picks and shovels are the infrastructure that every AI company depends on to function. Semiconductor companies, specifically NVIDIA, TSMC, and AMD, make the chips that power every AI model in existence. Every time a company builds an AI product, they need these chips. Demand is structural, not speculative. Cloud infrastructure, Amazon Web Services, Microsoft Azure, and Google Cloud are the platforms that host and run AI applications. As AI adoption grows, cloud computing demand grows with it. These companies profit from the AI boom regardless of which AI applications succeed or fail. Data center real estate investment trusts, REITs like Equinix and Digital Realty, own and operate the physical buildings that house the servers running AI systems. AI requires enormous amounts of physical infrastructure. These REITs benefit directly from that demand and pay dividends in the process. The picks and shovels strategy lets you profit from the AI boom without betting on which AI application wins. You're investing in the infrastructure that everyone needs, no matter what. Way number 3, dollar cost averaging into an AI index. This is the most boring strategy on this list. It's also probably the most effective for most people. Dollar cost averaging means investing a fixed amount on a regular schedule, say $100 every month, regardless of what the market is doing. When prices are high, your $100 buys fewer shares. When prices are low, it buys more. Over time, this averaging effect smooths out volatility and removes the pressure of trying to time the market. Applied to AI investing, this means picking one broad AI ETF, something like QQQ or BOTZ, and investing a consistent amount every single month. No watching the news, no panic selling when the market drops, no excitement buying when it spikes. Just a steady, disciplined contribution that compounds over years. Here's why this matters more than people realize. $100 a month invested in QQQ over the last 10 years would be worth significantly more than someone who tried to time the market and made emotional decisions. Consistency beats cleverness, almost every time. And with apps like Public, Webull, and Fidelity, you can set up automatic monthly investments in minutes. You literally set it once and forget it. The AI handles the execution while you focus on building other income streams. Let's bring it together. If you're new to investing and want simplicity, start with an AI ETF, BOTZ for pure AI exposure, QQQ for stability with AI upside. Pick one, invest monthly, leave it alone. If you want to be more strategic, build a picks and shovels portfolio. Focus on semiconductor companies, cloud infrastructure, and data center REITs. You're investing in the foundation of the AI economy, not a bet on any single application. If you want the lowest possible effort, dollar cost average into a broad AI index every month. Set it up once. Don't touch it. Check back in 5 years. None of these strategies require you to predict the future. None of them require you to pick the next NVIDIA before anyone else does. They just require consistency, patience, and a basic understanding of where the AI economy is heading. And at this point, after watching this video, you have all three. If this gave you a clearer picture of how to invest in AI intelligently, subscribe to Intelliwealth. Every video is built to give you one more piece of the puzzle. Next video, I'm breaking down what Warren Buffett actually thinks about AI and what his position tells us about where the smart money is really going. That one is going to surprise you. Drop a comment below. Which of these 3 strategies are you going to start with? I read every single one. See you in the next one.